All right, what on earth just happened to Popeyes Louisiana Kitchen? PLKI for you home gamers. Here's a well-run fried chicken chain with roughly 2,500 locations, mostly in the U.S., though with a growing overseas presence. For years, Popeyes have been one of the best turnaround stories in the restaurant space. The company revamped its brand, renovated its stores to bring in new customers. We love the stock and the company. But now the story seems to be stalling. See, Popeyes reported after the close yesterday, delivering a 1-cent earnings beat off a 41-cent basis, slightly weaker than expected revenues, 2.8% increase in same-store sales. That's a big deceleration from the year before. However, the real issue here was the guidance. Management giving weaker than expected full-year earnings forecast for 2016, tepid 2 to 3% same-store sales growth. That's why the stock tumbled today and couldn't keep up with the late-day rally. So what is going on here? Stock market overreacting? Popeyes potentially lost its way? Let's check in with Cheryl Batchelor. She's the CEO of Popeyes Louisiana Kitchen. Find out more about the quarter and her company's prospects. Ms. Batchelor, welcome back to Mad Money. Good to see you.
Great to see you,
First,
Jen.
congratulations on your incredible extension in your contract, which is fantastic. You've done an amazing job. We've looked at the market capitalization since you came in. It's been all up. But you did strike a more conservative tone on this conference call and admitted that the guidance had to be a little bit lower for some spend, but also some competition. Not the conference call that I'm used to.
Well, you know, we have a longer view on the market, I think, than the people we talked to today. We announced new bold goals for Popeyes for the next 7 to 10 years and a plan to really step up the performance of the company. So that's really what I think we need to be focused on. Yes, we did see some temporary competitive pressures. When beef prices come down, the burger chains get active with value, and that's where our customer shops as well. And so, yes, we'll need to be really sharp and competitive this year. We saw a slowdown in sales in the fourth quarter. But we'll get after innovation and sharp price points, and we'll be back to our strong performance.
Now, Steve Easterbrook, who is a remarkable CEO, came into McDonald's and has been back and forth with me. Candidly, really hurt Jack in the Box sales. They admitted on the call. This premium buttermilk crispy chicken deluxe, $4.39 price point. I mean, you say on your conference call that basically the burger chains really did play a role. Is it that competition, or is it the fact that they've lowered prices?
I think it's a pricing thing. I think we're seeing 4 for $4 and 2 for $2. And again, we're back in the value game. And the consumer is really attracted to that right now with some uncertainty in the economic situation. And so I think we're just in a temporary value marketplace, and great innovation and sharp value pricing is how we'll compete in that environment.
Now, beef prices have come down, so they have the wind at their back, but chicken prices are coming down, so you could get in that if you wanted to, right?
This year, we do expect stable to slightly better chicken prices, which is way better than a year ago, and that'll allow us to be really competitive. We also have our normal pipeline of exciting new products coming this year.
Now, let's talk about technology. This sounds like the technology is a great idea, and you're going to be offering it. Will the franchisees want to buy into it?
Actually, our franchisees are very excited about our investment in what we call One Technology. We've never had one technology platform for our restaurants, and today it's a real asset, as you've noted in Domino's and other companies investing in technology. So we think we have a chance to leapfrog to very contemporary technology for our restaurant managers, for our guests, and for our employees. And we don't have any legacy systems to worry about. So the franchisees are excited to move to new systems.
Okay, so when we talk about technology, for some people like Howard Schultz at Starbucks, that means more throughput. For other people, it means that you're better able to keep financial controls. Is it all of these things for you?
It is. I call it a triangle. On one side, it's the back of the house and keeping really sharp about controls in the restaurant on cost, labor, and food. For the employees, there's all kinds of new technology about how to set schedules and communicate with your manager. And then importantly for the guests, there's payment technology, there's rewards, there's gift cards,
you've got to get in that.
We got to get in that game, and we're excited to do that.
You have taken so much share in the chicken part. Are you maxed? I mean, you've done a remarkable job, but then I said, well, how much can you take?
Well, our market share has moved from about 14% to 25% of chicken QSR, combination of our incredible sales track record and our new units taking share. So I think there's still more room to go in chicken, but we're really focused on the total sector, on growing share of QSR.
Sounds like the excess cash flow you're going to be using to buy. Your stock gets hammered like a day like today, but the stock's been a remarkable performer. I have to imagine that given what you think are temporary factors involving these value meals, this is a good opportunity for the company to bring in more stock.
Well, we've told the marketplace that our board has authorized $200 million in repurchases. We've refinanced the company to have the flexibility to invest in both organic growth and share buybacks. And so we've told our story on capital structure, and I think you'll see the benefits of that in our plan this year.
And I think it is important to point out to people that when you took over, you're basically buying back almost the full amount of money of what the company was worth when you took over.
You are so right.
Right? Am I right? Okay. Well, anyway, I think I buy it. I think I buy what you're selling. You know, I love eating it. That's Cheryl Batchelder, CEO of Popeyes Louisiana Kitchen. Temporary factors, value meal, but technology, long-term thinking. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.